first trading day of December, dominated by worries again about a deeper slowdown around the world. The first trading day of December, dominated by worries again about a deeper slowdown around the world. Joining me now in a CNBC exclusive interview to talk about the issues that are plaguing this economy and what needs to be done to fix the current crisis, Paul Krugman, winner of the 2008 Nobel Prize for Economics, the author of the book, The Return of Depression Economics and the Crisis of 2008. Mr. Krugman, so nice to have you on the program. Thanks so much for joining us. Welcome back.
Hi there. Good to be on.
Can you characterize where we are in the cycle right now? That word depression always scares me. Characterize where this economic slowdown is now.
Well, it's it's free fall right now. All the numbers, the ISM came in this morning. We're looking at the unemployment claims. All of them are suggesting that we're really in a steep decline. You know, when I wrote the first edition of that book in 1999, I was thinking about Japan as the model of what I was afraid would happen to the United States. This looks worse than any point during Japan's lost decade. This looks worse than Japan '98. This is a very nasty slump with very little traction for the normal policy tools. And you said that some of the things that caused the Great Depression are making a comeback. Like what? Well, we've effectively had a giant bank run comparable to what happened in the 1930s. It wasn't, it didn't look like banks. It wasn't big marble buildings with FDIC insured signs in the windows. It was institutions, the shadow banking system, things like, auction rate securities and asset-backed commercial paper. But that was, in fact, more than half of our banking system when this crisis started. And that whole thing has shriveled up. It's been a huge crisis of confidence. And now we've got the real side. We've got a plunge in consumer spending, in investment spending that is a very nasty recession, all of it with the Fed right up against the zero bound on interest rates. So what does that mean, practically speaking, then, Mr. Krugman? A lot of people talking about the idea that once the consumer side of things really breaks down, which we haven't yet seen, it's going to cause an even further acceleration of this downturn. What are the practical reverberations of that? Well, there's a huge gap, basically. There's a huge gap opening up in spending. Consumers falling off, investment falling off partly because the financial system is dysfunctional. If nothing is done, that easily leads us to 10% unemployment, maybe beyond. It leads us to a huge increase in poverty, huge increase in suffering in the economy. Something has to fill that gap, and that's why a lot of us are talking about big government stimulus packages. What kind of a stimulus package are you recommending? Well, the back of my envelope said $600 billion in the first year, and that was a few weeks ago. That was before the latest round of bad news. Now I'm just wondering a little bit about how much. I think the limit is actually what we can figure out to do, not how much we need. What we need is basically as much as we can manage. So I'm hearing numbers, people have been looking at, say there's probably $350 billion of infrastructure that we can do pretty quickly. We can provide a lot of aid to state and local governments. We can provide extra aid to the unemployed. We got to rush purchasing power into this economy fast because things are falling very fast. Do you think we have the tools in place to get us out of this crisis? I mean, obviously we've seen extraordinary actions by the Treasury, by the Federal Reserve, global central banks. Is it enough? What else needs to be done? Beyond the fiscal stimulus, I think we need to get a lot more hands-on in the credit crunch. We've basically been so far just being, in spite of the enormous sums we hear, in spite of the $700 billion and all, it's still been kind of diffident. No ownership stakes are being taken, but without voting rights. No real attempt to get into the business of saying to the banks, look, we're taking a big share in your ownership. Part of the condition for that is that you lend again. Even Fannie and Freddie, which have effectively been nationalized, but they're not being run like they're nationalized institutions. We still haven't said that the full faith and credit of the taxpayer is behind their borrowing, and as a result, mortgage rates are not where they should be. So I think we're heading for a lot more direct role of government in getting the credit flowing. Nobody wants this. Nobody wants the government to seize control of the financial system, but a de facto, temporary, partial nationalization, I think, is where we're going to have to go. Final question here, Paul. How soon do you think we will get out of this crisis? Is it fair to say this goes into 2010 or no? It's very likely. I mean, the last two recessions didn't really end when they ended. The unemployment didn't start turning up after the last recession. It was an 8-month recession officially, but the labor market took 2.5 years before it started to improve. There's no reason to think this is going to be shorter than that, and a lot of reasons to think it could be longer. I wouldn't be too surprised if we see this thing going into 2011. All right, we'll leave it there. Paul Krugman, congratulations on the book, and we so appreciate you joining us today. Nobel Prize in Economics winner 2008. We thank you very much, Paul Krugman. Thanks a lot.